Hello. Today we're going to talk about the most recent data that we have from Germany. And we have Germany producer price change coming in, and we're seeing that it's slowing as it only rose by 1% from a year earlier in May 2023, slowing from a 4.1% rise in the previous month and below market expectations of 1.7%. It was the lowest producer price inflation since January 2021, mainly due to a substantial decline in energy prices, with electricity prices down more than 10%. And we're seeing that also across the board in non-durable goods. 10% decrease, such as food, 12% decrease. And we're seeing that the inflationary pressures are coming down, even though the central banks are still raising rates. They're still worried about inflation, even though these numbers indicate that inflation is coming down substantially. And we are here again in a phase where I would say central banks are behind the curve, and this is the best indication for that. Other than that, we're also seeing that the markets themselves are not opening too positively today. We're seeing that the lack of data or new data, which will provide a better picture of what's going on in the market space, this is missing. And within this phase, we have selling pressure coming in. We saw that Asia was negative across the board, and we're seeing this. The opening in the European space has also been quite negative. So altogether, not a very good picture right now. And also the US futures are indicating that the markets in the US will open negatively today. So for the time being, there are several, I would say, challenges that we're facing. Even though we have these inflation numbers from Germany coming in, we're not seeing a significant change in the yield space. If we look at the development of the 10-year yield going forward, this is not indicating that the market or the fixed income market is really pricing in a substantial decrease in inflationary pressures. On the contrary, we're seeing that actually yield levels, especially in the 10-year space, they are remaining on an elevated level, and this is not going to change too soon. And we have to wait for more data coming in, also affirming that the inflationary pressures are finally coming down. Other than that, there will be no material change in the market space, because if we don't see this gradual, substantial lowering of inflationary pressure, we won't have a substantial boost for the markets in space. And for the time being, as I've already mentioned several times, you should be more careful with your investments at this space, and you should have reduced your risk exposure, because I don't think that risk exposure currently really pays off, and that's why you have to be more careful. If you would like to receive constant updates on what's going on in the market space, please like and subscribe. Thank you.